Hello everyone and welcome to the first Nifty 50 video of the year. Unfortunately, it is happening on the back of the Iran war. However, there are a few dynamics at play that we need to understand, and definitely tomorrow we are going to have a negative outlook on the market as well. We are going to have a gap down scenario. But somehow, if you have been unaware of what is going on in the Middle East, it has to do something with crude, it has to do something with the supply of oil, it has to do something with uranium enrichment as well, and it also has to do something with the control of power in that particular region. So yes, I am not going to have a geopolitical lecture over here. You can go and have a look at some other videos to understand the dynamics in play in the Middle East. However, there are a few suggestions coming that we are heading into World War III, and that for me is a little far-fetched possibility. I have been a student of geopolitics in the past 10 years. I have been observing the dynamics in play for how multiple countries align with multiple interests. I have been following all of this for the past 10 years. And as of now, as long as Russia, as long as China, as long as India do not get involved, along with the European nations as well, if they are not getting involved in this particular scenario, I do not see a scenario where a World War III kind of situation is going to break. The second angle that I'm thinking is right now, if you compare to what things were 45 to 50 years back, that time we were having USA and Russia having a lot of nuclear power, a lot of military might and weapons at their disposal. But as of now, we also have China, who has made significant progress with respect to their military might. India as well has made a lot of progress in their technology developments with respect to the defense. And I do not see a possibility where all of these countries are going to come together knowing their military might, their nuclear weapons that they have at their disposal, and how much damage they can inflict on each other. I do not see that possibility where they are going to go head to head. So most likely, in my view, it's going to be a regional conflict. Yes, in that regional conflict, a lot of countries can get involved. You already see Iran has been bombing the bases in the multiple countries in their vicinity. So that is going to create a lot of instability. But again, looking at the dynamics in play, looking at the amount of nuclear weapon that so many countries are having right now, I do not see a full-fledged World War III situation playing out in the next few days. Of course, things can change, but it is highly unlikely in my view. But let us go and analyze what is happening in Nifty 50 at the moment. You can see over here right now, Nifty 50 is closing below the 30 weekly moving average, and that is not a good sign. It has closed with a wide range candle as well. In the previous week, I had also given an update on Instagram on the 22nd of Feb. As you can see over here, I had discussed next 2 weeks are crucial in the market. Two anticipations: gap getting filled, which was caused by the US-India trade deal, and the second anticipation was market retesting the 24,000, 25,000 region. So we have already come to retest the 25,000 region. 24,000 is still pending. I had also asked you to have a look at this particular video, which I had uploaded last year towards October end and November beginning. In this, I had already discussed that a fall was pending in Nifty 50, and had you gone through this video, you would have had an understanding of how things behave in the market, how price reacts, and how we are supposed to create positions with respect to Nifty 50 and our particular individual stocks. But coming back, these are the regions where I'm estimating Nifty 50 may come, and in the next few weeks and next few days, we may be seeing some selling pressure in the market as well. And I have some good rationale for that. I think this region can also be a very strong support in the times to come. But I would first ask you to have a look at some of the charts of the banking sector, the metal sector. Let me just pull out the chart of CNX Metal. If you have a look at this is a kind of a structure which had broken out in the previous year. We had seen this kind of a flag-like structure happening. After that, we saw a kind of consolidation playing out, and market continued to head higher and higher and higher. We also see that right now, at this current point, market is far away from the 30 weekly moving average. And if we just take into consideration the teachings of Stan Weinstein, he says that every time the market moves very far away from the 30 weekly moving average, there is a tendency that a mean reversion may play out in the market, and the market may come back to test the average over a period of time. So that is what I was also anticipating, and that is why this was not a good region to create positions at the top. Somehow, if you have created positions at the top, this was not a good entry point. You should always consider that you should not enter at a higher high. Rather, wait for the market to pull back and make your considerations to enter at a higher low. This is where the risk to reward is very good. This is where the risk to reward is not good. Again, if I have a look at some of the metal stocks over here, this was also one cup-like structure over here, and then breakout, and then again, this was a good entry point. Market continued to head higher and higher and higher. As you see, there is no correction. So a correction was pending in this particular stock as well. There is no entry point again over here. One more structure, if you see, this is one more flag-like structure. Market broke out over here. Very good entry point. Market continued to head high. 40%, 50%, some of the metal stocks have gone. So it's quite natural that after a 40%, 50% move which has played out, there is going to be some amount of profit booking which would also be happening over here, which most likely would bring the prices back to test the averages around this point one more time. I am expecting that the prices can come. Look at this metal stock as well. Look at this. This is another cup-like structure. Beautiful breakout just above the 30 weekly moving average, breaking out of the structure. This again was a good entry point. This was a good entry point. And at this point, there is no entry one more time. The likelihood is greater that the market can again fall in this region. This stock, as you can see, this has also moved like a rocket. Another 50%, 60% move playing out. Tendency of profit booking again very high over here, so we can expect it to pull back around these regions, test the averages over a period of time. I would also like you to have a look at Nifty Bank. We have seen Nifty Bank head into a higher high, higher low. This is a kind of an outperforming sector in the market. In this as well, a kind of correction is pending, because what we do see is some of the PSU bank stocks, public sector bank, the movement has been brilliant. 40%, 50%, some of the stocks have moved. I'll just take you to the structure of some public sector banks as well. This is one more kind of flag-like structure. This was again a brilliant entry point just above the 30 weekly moving average. Brilliant 40% move has played out over here. This stock as well, you can see cup-like structures breaking out over here. Again, a very good move has played out. One more chart I will take you through. This is one more kind of consolidation pattern over here. Breakout entry was coming somewhere over here, and the market here too has moved very far from the 30 weekly moving average. This as well, you see, this is a kind of a flag-like structure, breakout entry over here, and then again the market has moved a lot. So at this particular time, the tendency is greater that the swing traders are going to go for a round of profit booking. It's just that at the top, the news has also come. So there is a likelihood that we may see this correction play out on the back of this bad news that we have of war. And again, I do expect that we are going to make one more higher low over here. And in the times to come, we should be heading in the higher direction. But definitely this area is going to be an area of panic. This is going to create some anxiety in the market. So we have to see how things are going to play out. The similar situation is also there in CNX Finance. CNX Finance, I will open the chart of that. In the financial sector as well, we have been having a kind of a higher high, higher low rally. At this particular point, there was a tendency that a swing profit booking scenario can play out, and there is a good chance when the market would be coming back in these regions again. This could be a good opportunity. Never enter at a higher high. Better you enter at a higher low. This is the point where the risk to reward is in your favor. This is the point where people are more comfortable to invest. So this is what I have been propagating in the past 1 to 2 months. If you have been analyzing my views, analyzing my videos, I personally have also been reluctant to create new positions in the market. So the situation that we have in our hand is we have the metals, we have the banks, we have the finance. This is one area of the market which has been performing in the past 6 to 8 months. We have the performing sector where the correction is pending in the market, where we would like some correction to happen. After that only we can create some positions. And then we have the IT sector, we have the pharma sector, which is setting up in my view at the moment. And then we have the real estate sector, which is also underperforming. So there is a likelihood that money can be moving away from the metals, banks, finance, which are known as the high beta segments. There is a tendency that market can move away from the high beta stocks to the defensive stocks, the defensive segments like pharma and FMCG. So there is a likelihood that whenever there is uncertainty in the market, the money does move from high beta segments to the low beta segments. And that is where I think pharma sector can come to the rescue here. However, since Nifty 50 overall would be falling, the selling pressure may make it very difficult to head in the higher direction. If I just open the chart of CNX Pharma, you can have a look at that chart as well. Yes, we have opened the chart of CNX Pharma, and CNX Pharma is also making a very beautiful structure over here. This is a kind of a pole. This is a kind of a flag-like structure again, and this is a situation where the market has started to trade above the 30 weekly moving average. Many people can consider this point as a swing low, and they may consider creating their entries in the times to come. However, I would still urge you that wait to see how the fall plays out in the market, how Nifty 50 is going to react in the next 2 to 4 weeks, because we are in a scenario where selling pressure is there in the market. We are in a scenario where the high beta money is trying to move away, and will the defensive FMCG and the pharma sector come to the rescue, that is also uncertain. So whenever there is so much uncertainty, prefer to hold the cash in your hand. There is no requirement for you to just think in two kind of mindset, which is either profits and loss. I am again urging you, think in terms of profits, think in terms of losses. Also at the same time, think when is a good time to hold the cash. It's not just about profit and loss. You should also know when to hold on to the cash, when to wait for the setups to get formed, when to see a potential good area of buying in the market. That is the time where you should be looking at high relative strength stocks and creating your positions over there. So holding on to the cash when the things are not going right, that is also a matter of credibility. Acknowledge it. Not losing money in the market is also a matter of credit, and think about the market in those perspectives as well. So that is my view with respect to the Indian market. I do think when the high beta segments are going to fall, Nifty 50 can also be pulled down to these areas. We should be looking for opportunities in these particular areas. But let us hope that the fall is not too terrible, fall is not too panicky, because it is going to be difficult. For all those people who are holding on to their investments, they would be seeing a kind of a drawdown in their portfolio. For those who have entered right at the top, that is a wrong entry for you. You should avoid these kind of entries in the market in the times to come. You should wait for the structures to get formed, and whenever you see that price has moved too far away from the 30 weekly moving average, that is not a point for you to make an entry. Wait for the prices to pull back, then again you will be getting good opportunities to enter at the higher lows created in the structure. So let us see how the fall plays out in the market in the next few days, in the next few weeks. I do expect that if things do stabilize in the Iran war situation, we can come here to create a bottom. And in this bottom, I would be very keenly looking at some of the outperformer stocks. So that is my view right now. That is how I'm thinking. If in these areas we continue to see red color candles, definitely I am not creating any positions over there. I am simply going to resort to risk management. As I have always told you, we are not in the industry of making money. We are in the industry of protecting the money. So I would ask you to be aware of how things are moving, aware of how things are turning bearish or bullish. The opportunities are definitely going to be there. Most likely by the end of April or May, we can be seeing very good opportunities in the market. But let's see how the market is going to behave. Let us not have any preconceived notions in our head. If things start to go against me, as I told you, follow the flat 10% stop loss rule. That is also one thing which is going to protect your money. And if things do not go against you, very good, hold on to your positions. As the market keeps heading in the higher direction, we could be getting some brilliant moves by the end of the year or in the next year as well. So that is all I have to say. Thank you for your time. And if you have any doubts, you do know where to reach out to me. You can definitely DM in my Instagram handle. And if you have my contact, definitely you can contact me there. Thank you.